Happy Friday, everyone. Happy Friday. See some new faces, some old faces. If this is your first time attending one of these trainings, drop a 1 in the chat. How many new people do we have in here? Drop a 1 in the chat if this is your first time on one of these trainings. Okay. It's always great to see some new faces in here. We got some special nuggets for you today with Karla. We're gonna wait a few more minutes. The room's still filling up, so give us a few more minutes. Let these people in. While we're waiting, why don't you guys drop in the chat where you're from? Where are you guys listening in from? Where are you guys listening in from this Friday? Florida, Texas, California, Mississippi, San Diego, Carolina. Okay. Good morning for some and good afternoon for others. Anyone celebrating Cinco de Mayo today? All right, since we do have some new people that are attending today, I do want to go over some general housekeeping for everyone that's new. Let me hop on here real quick. You guys can hear me okay, right? Drop a 1 if you can hear me okay. Okay, good. All right. So for everyone that's new, that's attending, and who is currently a member of our TPG program, I just want to remind you that you can access all your modules within the program. Our coaching calls are recorded. They're available in there. We do have a marketing library with resources that are available for you to download. We also have the leads. There's a section on there on how to access your leads. So when you go through those training modules and you get to your assessment test, if you need help, please send an email out to support@taxreductioncompany.com so we can get you assisted and get those leads turned on for you. Today, we have a special treat. We're here with Karla Dennis. She's going to be going over some advanced tax strategies with us. Karla has a master in taxation. She's been featured in MSNBC, KTLA, Yahoo Finance, Smart Money, and her firm was actually featured as one of the fastest growing tax firms in Inc. 5000. So without any further ado, let me bring on Karla Dennis. Let's see some fires in the chat for Karla. Come on. Let's see some fires for Karla.
Thank you, John. Thank you. Hello, everybody. I'm so excited to be here with you and share some strategies with you guys. Thank you, Marvin. Wow, you guys are cracking me up. Mia, everybody that's saying hello, Clarissa. I certainly appreciate that. My goal today is just really to share some strategies with you guys so that you guys can really have some tools in your toolbox for yourself, for your clients. And I'm gonna go over some strategies that I trained on last week because we got a lot of questions on those, but I'm also going to back end it with the next level of strategies that you need to be adding to your wheelhouse. So we're gonna just jump right in and hopefully I'll make this, my PowerPoint presentation come up. Hopefully you guys can see all that real good and so forth. Thank you for that. And let me know, put a 1 in the chat box so you guys are seeing my screen okay. Everybody see that? All right, excellent. So we're gonna talk about some workhorse strategies and I wanna talk about Schedule C. We're gonna build off of Schedule C, sole proprietor business, because a lot of our business owners, our side hustle individuals, they're starting out with setting their businesses up on a Schedule C, or they are doing a single member LLC. So these are some things that I want you to have in your pocket so that you can be able to really help your clients. So we're gonna move through this in terms of what needs to happen, some things for you to consider. So one of the strategies that I wanna talk about is rent from your spouse. When you are operating a Schedule C business, you can have a husband-spouse Schedule C business where you are allocating a portion of that income to spouse one and a portion to spouse two. But in this strategy, you're not doing that. And this particular strategy, you are going to determine who is going to be the owner of the business. And that individual is going to own the actual Schedule C. When you do that, you're then going to turn around and you're going to rent space. The owner of the Schedule C is going to rent space from the spouse. Now, you can do this whether or not you have ownership of your property, or you can do this whether or not you have you're renting from someone. I'm gonna take my picture down so you guys can see the full screen, whether you're renting from someone. So if you own your own property, you literally are gonna execute a rent agreement between the spouse and the other spouse. So for example, if Jack is married to Mary, Jack is then the owner of the Schedule C. Mary actually is on title to the property. Jack could be on title to the property too, but Jack is going to rent space from Mary in their home. When you do this strategy, what you're doing is you're taking that amount of rents. So I like to use numbers. Let's say, for example, that we are going to rent at a tune of $500 a month. Okay, that's going to be $6,000 per year. You are going to be paying rent out of your Schedule C. Checks have to move, money has to move. You're going to have a bank account where you're running your sole proprietor business. Out of that bank account, you're actually going to pay over to the other spouse rent money every single month. You might be thinking to yourself, well, Karla, what is the purpose of that? What we're doing is we're taking money off of the Schedule C, moving it to the Schedule E. When we do that, we're changing the character of the income, meaning when it's on the Schedule C, it's earned income. Earned income is subject to self-employment tax. When we put it on the Schedule E, it automatically becomes passive income, not subject to self-employment tax. When we put it on the Schedule C, the Schedule E, we can deduct depreciation and any other expenses that we typically wouldn't be deducting on the Schedule C. This strategy makes great sense when you have lots of self-employment tax perhaps that you're paying, but it also makes sense when you don't have self-employment tax. Why? Because if you are running, for example, a home office, and you are having a Schedule C that is running at a loss, and you're not getting the benefit of your deductions of your home office, if you're on a Schedule E and you move that money to a Schedule E, you can get the benefits of the utilities and the depreciation and other items. So this is a great strategy when you want to cut self-employment tax, a great strategy when you want to get the benefits of a home office, not being limited to not being able to take that deduction. So I want to make sure that you have that strategy in your pocket. The second strategy I want to further develop, employ the spouse strategy. This strategy is where you are sitting on a Schedule C. Again, one of the individuals is going to be the owner of the Schedule C. So say, for example, if I am running my business as a sole proprietor business, I'm the owner of the Schedule C, it's Karla's sandwich shop. I am making sure on paper, I'm the owner, I'm the one doing business as Karla's sandwich shop, I'm the person in charge. And let's say I'm going to employ my spouse. And when I'm employing my spouse, I have to make sure that I'm following proper employment protocol, right? I'm going to have them on payroll. They're going to fill out a W-4. They're going to have a job description. All of the things that you need to make sure you have in place to be an employee, you want to have in place, except for, here's the real big deal with this particular one. When you do that, you actually are not going to pay your spouse wages. I know you just said, Karla, employ the spouse. I know. You're actually not going to pay your spouse wages. You're going to pay your spouse for their medical costs. You're going to pay the spouse by reimbursing them for other expenses. When is this a good strategy to utilize? This is a great strategy when you are self-employed in your business. You need to have medical insurance. Medical insurance is through the roof for anybody that has to pay for it out of their pocket, right? You want the spouse to be able to insure you, insure your children, insure your family, whatever the case may be. And we know that when you have the appropriate plan in place, that reimbursement of medical expense is not going to be taxable. It's not going to be taxable. You're going to generate that W-2. You're going to not have to pay Social Security tax, and you're going to have in box 14 on the W-2, and I don't remember exactly what number, so don't quote me correctly on that, but box 14, I believe it is, where you're going to show that reimbursed medical expense, and that's going to go into IRS on a W-2, but there's not going to be W-2 wages. The beauty of this strategy is it allows you to pay your spouse, get a deduction for the reimbursement of the medical expenses, but not pay Social Security, not have that extra burden of Medicare tax, and really be able to get a great tax deduction on your tax return. That's a great strategy to utilize when there needs to be medical insurance in place and you have a spouse that is going to allow you to do that, right? I'm all about the tax strategies. So my spouse knows it's going to be all about the tax strategies. That's what we're looking at first. That trumps everything. So that's something that you guys definitely want to look at. Okay, so now the third strategy we want to go over to is employ your children. This strategy to me is so underutilized because many of you think, I can't employ my kids. These are your own minor children that are going to be on your tax return, that are your dependents. So in order to employ your children, again, you got to have the proper protocols in place. You got to make sure the kids have a job description. You got to make sure that the job that you are employing the kids to do is a job that they could technically do, right? You want to make sure that you are tracking their hours like a little timesheet. You want to make sure that the money moves, that it's a true payroll, not that you're just employing your kids and you're going to just transfer money to their bank account. You want to make sure that it is employing your kids, they're getting paid on a recurring schedule, and that money is moving from one account directly to their account on a direct deposit scenario. Or it could be a check, but the money has to move. That's the most important thing, and it needs to move on a recurring basis. The key takeaways from this strategy are, you want to make sure that you realize you're shifting income. John, I apologize. I'm getting some background noise. I don't know if it's just me or someone is unmuted.
Yeah, I'm trying to find it right now.
Thank you. You're shifting income from a lower tax bracket, from a higher tax bracket into a lower tax bracket when you are paying your children. If your children are ages 17 and below, what happens with this strategy is you do not
Karla, you're muted right now. Just unmute yourself real quick. You're ready to rock and roll.
Can you hear me now?
You're good.
Okay. Sorry about that, guys. Do I need to back up?
Yeah, back up just a little bit.
Okay. Do we know at what point I muted?
Not that far. Go back one. The next slide. You could just start right there and just kind of go into it. 17
Okay.
under. Clarissa said 17 under.
Okay, perfect. Thank you, guys. I apologize for that. Okay, so when you are employing your minor children and they are 17 and under, you do not have to pay Social Security tax. You do not have to pay Medicare tax for them when they are 17 and under if you are employing them on a Schedule C sole proprietor return, or for that matter, a single member LLC. You don't have to pay Social Security tax. But here's the thing, and I want to make sure you guys anchor this. You have to put them on payroll. And when I say put them on payroll, you actually have to make sure that they're on a payroll schedule, make sure that that actual pay changes hands, that you're actually giving them an actual check or a direct deposit into their bank account. And I recommend that if you can, you do it on a recurring schedule because it legitimizes the transaction. Could you do it at the end of the year and do it in one lump sum? You could, but that would probably be a little bit more questionable, right? When you are paying your minor children, you realize that you are avoiding that self-employment tax, that you are shifting income from one family member that's in a high tax bracket to another family member that's in a lower tax bracket. You're shifting income. But here's the beauty. If you are paying your minor children, and as long as you're paying them below the standard deduction, they're not going to have any taxable income anyway. So if you can imagine, if you are employing 2 children, and if the standard were just 12,000 because it's an easy number, you could potentially save 24,000. At one point in my case with 4 children, I could have saved 48,000, whatever the standard was. It wasn't that high back then, but whatever that standard is, you want to make sure, again, job description, appropriate job description for the child. When my kids were younger, and I do mean younger, they would come in my office, they would empty the trash, they would fill up the copier, they would do little things around the office so that they can be employed. And remember, babies do Huggies commercials and they are paid for that. So you can employ your children. If you're looking for a job that your kids can do, I'll just throw this out there. All of us that are doing marketing, social media, and so forth, depending on the type of client that you are trying to attract, perhaps you can use your kids' likeness in your marketing and pay them for that, because likeness is a paid benefit that you can pay people for. So that's something for you to consider when you're dealing with your kids on payroll. All right. And then the other part of that is when you hire your kids, you always have the benefit to fire the kids. Kids get real smart real quick when you're dealing with their money, and you can teach them some financial lessons. They can invest in IRAs, Roths, and so forth. Okay. All right. The next strategy I want to go over is the de minimis fringe strategy. This is a strategy that I feel like is underutilized because we don't really think about this strategy so much. The de minimis fringe strategy really is dealing with you're giving a fringe benefit to your employees, inclusive of yourself. And you really want to base your de minimis fringe benefits on your policies that you kind of write yourself to have in your office. So for example, a de minimis fringe benefit could be something so simple as a member of our staff is going to be sent a basket, a gift basket of some sort. A member of our staff is going to be given a day at a spa, a de minimis fringe. Typically, they say that de minimis fringe should be around $100 or less. With inflation, you probably could get away with probably $159. I did the math. Since that law came out of 100, if we indexed it for inflation, we would be at about $159 right now. You could, when your employees hit certain matrices, when you hit certain goals and bonuses, you could send yourself a gift basket, a fruit basket, purchase yourself flowers. It's not a gift because gifts are limited to $25. This is de minimis fringe rule, and you want to make sure that you have that rule in place inside of your business. And how do you have those rules in place? Document, document, document. I want to take a moment and tell you guys something really important. If you are running your own business, make sure you journal your business. I know if you own a corporation, you're supposed to keep minutes, but I have journaled my business and I write down things about my business probably since day one that I had my business. Having worked in a law firm, they notate everything. So I've gotten into the habit of that. The reason why you want to do that is even if you don't have a formal policy in place, if you have a recordation, meaning a written record, copious notes of what you have done, and it was done at the time that you did it, that's a great record that you can share in the event you're ever audited with IRS. So I recommend all of you start January 1st off with a notebook, nothing fancy. I know all you guys like your iPads and all this other little things, but I am going to tell you written documentation is still king when it comes to audits. So you want to make sure that you have that. Okay. Our next strategy that we're going to jump into, which is one of my favorite strategies, because I am always trying to travel and go somewhere, is being able to deduct our exotic travel. And so when we talk about exotic travel, we are talking about traveling outside of the United States. There are rules for the way you can deduct travel when you are inside of the United States. And then there are rules as to the way you can deduct travel when you are outside of the United States. And there's rules regarding North America, and there's rules regarding other parts of the country. Just an FYI to you guys, all travel is not created equal. So when you are traveling, you want to be able to get your travel deducted, right? You want to be able to take a business trip. In order to get that exotic travel deducted, you have to make sure that your travel must be at least less than 7 days. So when I say less than 7 days, that means your first day that you travel, let's say you leave out of town on a Sunday. Sunday's your travel day. So that is not part of your 7 days. So if you were to travel on Sunday, go Monday through Saturday and get back on a Sunday, you will be less than 7 days. When you're able to do that, you can deduct your meals and your lodging. Now, here's the key. You want to make sure that you have meetings scheduled while you're doing your exotic travel. As an example of having meetings scheduled, here's the rule. You can have a meeting scheduled that can potentially further your business, not necessarily needed for your business. Allow me to give you an example of that. Let's say that I am going to travel to Canada as an example. And let's say that while I am traveling to Canada, I want to go there and I want to meet with an accountant in Canada and I want to learn about the Canadian tax system. When I schedule that meeting with an accountant in Canada, I want to make sure I schedule that meeting every other day. Maybe one day I'm going to meet with an accountant. Maybe the next day I'm not going to meet with anybody. And then the next day I'm going to meet with a taxpayer in Canada. When you do that, the day in between is considered a layover day. It would be costly to fly back home and then fly back out. So you're able to deduct your lodging and your meals on your layover day. So when you are planning your travel, you want to make sure that you plan it properly so that you don't have to allocate between business and personal travel if you plan it properly. So if you're thinking about planning a summer vacation to go somewhere and you really want it to be a business trip, think about how you can structure it to be a business trip. Now, some of you may be thinking to yourself, well, Karla, is that legal to structure a trip that is a business trip versus just a regular vacation? And it is. The Supreme Court ruled that man has the right to arrange their affairs to pay the minimum amount of tax. So you have the right to take some time to strategically plan to reduce your tax bill. Therefore, you have the right to strategically plan your vacation so that it becomes a business trip, remembering that you want to engage in some activity that could further your business, could further, not that it has to further your business. Now, when you go outside of certain regions, and I don't have those regions memorized, but I'm happy to send them to you. When you go outside of certain regions, then the travel has to be required to further your business. So it's very interesting, but understanding the rules will get you some tax write-offs. So I love that. All right, the next strategy I want to talk to you guys about is the next level in the conversation, right? When does your client need to be kind of thinking about, is it time for an S Corp? Chat with me in your chat box and let me know, do you guys have clients that are asking you these questions? And you can put a 1 in your chat box, or do you guys wonder, hey, when should I advise somebody to make that switch from being a sole proprietor to potentially being a LLC to potentially being an S Corp? John, tell me if I'm getting people chatting in the chat box.
Oh yeah, a lot of ones. A lot of ones.
Okay, very good. Just had to grab a drink of water there. All right, so here's the thing. How about we have some duality? How about we have both? How about we tell our clients, stay on a Schedule C and plus it, open up an S Corp? Why would we want to do that? Let's say that I have a client that is paying a lot of self-employment tax. And typically my rule of thumb for someone to convert from a sole proprietor, from an LLC to an S Corp is really around 55,000. Why do I come up with that number? Because where I'm geographically located, although I do work in all 50 states, in the state of California, we have a minimum franchise fee. At about 50,000 is about the amount that if you start going beyond that, that you're going to start to pay more than that minimum franchise fee of $800. 50,000 is a pretty good number. I don't like for people not to pay any self-employment tax, that's not ever going to be my recommendation. I think that we got to think strategic. We got to think long-term. People do need to pay something into self-employment tax, have that earned income for other reasons, qualifying for loans, for having potentially Social Security, Medicare benefits down the road, disability benefits. There's a lot of reasons why I don't like to opt people fully out of paying self-employment tax. But here's the thing. When you have a sole proprietor business and you also pair it with an S Corp business, now you have some great duality, meaning I can run my sole proprietor business, my minor children can still be paid under my sole proprietor my sole proprietor business, the children that are 17 and below. And then I can pay my S Corp a consulting fee to do whatever I needed to do. You might be thinking, how do you distinguish between what goes on the Schedule C and what goes on to the S Corp? How would you make that distinction? I think that when you have an operating business and you are starting out as a sole proprietor, that you really are becoming a brand and that you really are going to be managing your wealth, your business. Maybe you start another business, maybe you're buying some property. You're going to start managing your stuff. Having that S Corp can become your consulting business, your management company to manage other things. Pay your management company a fee, and you can decide what that fee needs to look like. You could pay it quarterly, you could pay it monthly. You have to pay it. You want to make sure there's an agreement between the Schedule C business and the S Corp business. Pay it over to the S Corp, minimize what's on the Schedule C, move into the S Corporation. But here's the caveat. When you move to an S Corp business, you have to be prepared to put the shareholder on payroll. You have to be prepared to put the shareholder on payroll because you never want to, in the eyes of IRS, not pay self-employment tax when you're in a corporation. Therefore, you got to go on to payroll so that there's some amount of Social Security and Medicare tax being paid. And I want to be clear on that. When you are a sole proprietor, all net profit is subject to self-employment tax. So if I net 100 grand, if I net 50 grand, 60 grand, 100% is subject to self-employment tax. If I'm in an S corporation, not the case. I get to decide what's going to be subject to Social Security and Medicare tax based on how much I put myself on payroll. Okay. I want to make sure you guys understand that. So if I'm running a sole proprietor business, I may still have all of my income coming to my sole proprietor business from my clients, from my vendors, whatever the case may be. My sole proprietor business is paying my S Corp Inc. company. It's paying it on a regular schedule. Money is moving into the corporate bank account. There is an agreement, just like you have agreements between other companies. There's an agreement between the companies that I am going to consult with my sole proprietor business, and I'm going to put myself on payroll in my S Corp business. You don't need to put yourself on payroll in a sole proprietor business because your net profit is already subject to self-employment tax. So when you're in a sole proprietor business, you don't need to be so concerned about putting yourself on payroll. Could you? You could, but I don't recommend that. I recommend that you just let your net profit get hit with self-employment tax. But when you move over to a corporation, I recommend you put yourself on payroll. I'm going to tell you a couple of things about that. When you put yourself on payroll and you say to yourself, I'm going to pay myself on a regular basis, you know what I have seen from my own experience and the experience of the clients that I advise, their income increases. Their income increases. Why does their income increase? Their income increases because now they have made a decision that they're going to start getting paid. And it could be once a month, it could be every 2 weeks, it could be every other month, just a recurring schedule. But once they command that income starts to flow through. The other thing that I will tell you really quickly when it comes to an S corporation is that you are in business as a business owner for 2 reasons. Does anybody know why you are in business as a business owner, why you are self-employed? John, I want you guys to type that in the chat. Does anybody know? And John, if you can read a couple of the answers to me.
To be successful as a business owner.
Okay. Any other reasons why people are self-employed?
Deductions, make money, provide service or product and make money, to control time.
I love these. I love these answers. These are all great answers. But when you are self-employed, you're self-employed for 2 reasons. And I just want to make sure you guys are crystal clear on this piece. You are self-employed for 2 reasons. And those 2 reasons are, number one, I could go work for somebody and I could probably command a high salary, right? If I were to go say, hey, hire Karla Dennis, I'm sure I would have no problem and I'm sure I would get paid well. So I would command a salary. Therefore, when you are self-employed, you need to get 2 things. You need to get your salary because you could go work for somebody else. But because we know self-employment is a contact sport, you got to get profit. So you're self-employed for 2 reasons, profit and to be paid. Don't distinguish profit from payment. I don't want you to do that. That's going to be another topic that we're going to talk about the next time that I get the pleasure to serve you guys. We're going to talk about that. I'm going to close my mouth because Karla Dennis can talk to you guys all day long. John and Kenny, I am going to let you guys take it away and tell them what we have going.
Yeah, absolutely. Thank you, Karla, for the presentation. I'm sure a lot of our members have definitely enjoyed it. So what we're going to do now, guys, is we're going to open this up for questions. Karla's going to go back and forth with you guys. So please drop your questions in the chat box. But in the meantime, to let you guys know, we are having our 5-day tax growth challenge, which is starting this Monday, where it's going to be a 5-day challenge with myself, Karla, Carlton, and a few of our team members, where we're going to be going over how do you start and grow a planning business, where you're working with, high ticket advisory clients. How do you find those clients? How do you provide the tax planning services? How do you sell those clients over the phone? All of these intangibles. And Karla's going to be going a lot deeper on tax strategies and all that type of good stuff on the challenge. And Karla, did you kind of want to talk about what's going to be your topic on the challenge?
Yes. I get super excited about this because I tell you guys, I love strategy. I love planning. To me, I feel like I am the Picasso of the planning world. It's like having a white palette and I get to paint, but I'm painting with tax code. And the reason why I am going to be sharing with you guys, teaching you guys what strategy looks like, tastes like, feel like, how you implement strategy, why you want to do that, because you want your time back. If you really want to have control over your time, control over your money, and really get profit and a salary, you really are going to want to be on this challenge because we're going to be teaching how to make income all year and not just be in that crunch of January through April 15th. I had worked that crunch for years and years and years, And then I decided to morph into just doing planning. Now, our firm does both, but when I tell you that Karla Dennis is walking out of her office at 4 o'clock, if she's even showing up in her office, I'm no different than you. I just have a little bit more knowledge that I am going to impart on you as to how you could get there too. So I get so excited about it. I get excited about teaching strategies and just turning those light bulbs on. You guys are super smart people. You really are. You just need somebody to connect the dots so that you will get it.
Absolutely. So what we're going to do, guys, we always do this on our webinars. This is going to be our last Friday webinar because we start on Monday. So if you guys are not a part of the challenge, you might not see Karla for a minute. So what we're going to do for the first, we have 10 people. If you guys purchase on this webinar today, while Karla's going to go through the questions, we're going to give you guys our tax growth bundle. And what comes within our tax growth bundle is going to be our $3 million email blueprints, where these are literally emails that you can start sending to your clients right now, new clients, and these emails are literally put together to generate tax planning appointments and get them on the calendar so you can start having those conversations. The next training that you're going to get for free is called Frictionless Pricing, where Karla really goes into how do you transition from that tax preparation and bookkeeping model, and how do you, transition your practice to start selling planning, and what does that look like from a pricing perspective, and all of that good stuff. So we're going to give that away for the first 10 people. It's going to be the little box that says $47. Do not check that at all if you're the first 10 people, because you're going to get that for free. So we literally will be giving that away for free for the first 10 people. I know, John, you'll be monitoring that as well. That we'll give that away. Then after the 10 are gone, it is what it is. So Karla, I'll let you take it away and kind of start answering questions.
Okay, John, let me know what questions come through. And one of the questions that I know I get a lot is people ask me all the time, what do I enjoy about being in this industry? Because tax industry could be a grind. What I enjoy really about being in this industry is really sharing my knowledge base, teaching others, and learning from others too, because there's so much out there to learn. I really enjoy this industry. I love having conversations with people, and it's not all about the numbers for me. And that's the one thing that I'm going to be sharing with you guys, how to really start to really enjoy this industry and really lean in to what you know and bring up your knowledge base. So John, go with the questions and I will answer questions.
Yeah, Karla, one of the questions that came in is, how long can you have a non-profitable LLC real estate business before the IRS looks upon the business as a hobby?
Ooh, a non-profitable real estate business. So when you say real estate business, I want to know, are you talking about a real estate business as a realtor, or are you talking about a real estate business as an investor? And I'm going to answer both questions. When you're talking about a real estate business as a realtor, you could have a loss for a long time. The rule says that if you have a loss 3 out of the last 5 years, that IRS could come in and audit you, and IRS could reclassify your loss as a hobby, therefore limit it. The key takeaway there is make sure, and this is another strategy, make sure that if you have a loss, that your loss is starting to minimize. So if I have a loss of, say, throw out a number, 1 year, 10,000, the next year that loss may be $9,050. I need my loss to start diminishing so that I can show growth. That's the key. They could audit, but doesn't mean that you will lose your loss when you are in a real estate side as a realtor. Now, if you're on the investor side of the equation, typically you should be running a loss, because especially in the first probably 10 to 15 years, because if you own real estate, you get what we call depreciation, which is the phantom write-off. of the actual acquisition cost of the purchase price of the property less land. So if I buy a property, 100 grand, I got to allocate a portion of land. Land's not depreciable, so I'm only going to be able to write off that portion that's depreciable. When you are adding depreciation on top of that, most people that are investors are running losses up until about 10 to 15 years.
Hey, Karla,
Hopefully that answers that question.
Karla,
Yes.
I just wanted to congratulate a few people for jumping into the VIP. We have Greg and Joanne. They just jumped into the VIP. We also have jumping in on the challenges, Tatiana and Darvin and Martha. So
Yay!
yes.
Congratulations, you guys. I'm so glad that you guys are jumping in. For those of you that are jumping in on the challenge, kudos to you for taking control of your next level of where you're trying to grow in terms of building your income, building your wealth, building your legacy. For those that are jumping in on the VIP, I'm really super excited for you guys because we will be on answering your direct questions and just really leaning in and trying to give you as much as we can to help support you even prior to getting into the challenge. So that's just another level of getting you answers to your questions and getting you the help you need sooner rather than later. So congratulations.
And Karla, can you explain kind of the difference between general admission and VIP for members who really aren't sure what the difference is?
Yes. So when we have this challenge, the individuals that are going to come into the VIP room, they're able to come in, I believe, a half an hour to 45 minutes prior to general admission. Mm-hmm. And what we want to make sure we do for the VIPs is we really want to go around the room, get to know you, and answer any question you have immediately to ignite your success sooner rather than later. When you are in the general admission, you are going to be with everyone else, which is great. I'm glad you're going to be there. When we're in the general admission, that's when we're going to be doing the teaching. That's where we're going to be doing all the training. So the distinction is you get a little bit of one-on-one time inside VIP versus just diving into the training.
Got it.
Yeah, just
I'm excited about both, Kenny.
Me too. It's going to be really, really fun and it'll be good. Clarissa has a question. Can you upgrade? You can definitely upgrade if you guys have done the 97. Zach will drop in the upgrade link where you guys can upgrade and we'll get you upgrade into that VIP room with all of us.
Yeah, the more that we know about you in the VIP room, the more that we hear where you're trying to go, what you're trying to accomplish. As we go through our presentations, we will be trying to tailor some of that conversation to answer those questions. So that will be very helpful.
Hey, Karla, Kenny, I just want to congratulate Aurora and Vanessa for joining.
Nice.
Yay!
Congratulations, guys. Congratulations.
Karla, you got another question?
I do.
Okay, I had a question come in from Caleb. He's asking, can you use the rent strategy and do the Augusta rule at the same time?
Absolutely, you can. So you can layer strategies on top of strategies, and it's endless. Like, honestly, I laugh because I get excited about this stuff, right? I know people think I'm weird because I get excited about taxes, but I do get excited about taxes because it's just so much that you could do when you're dealing with taxes. And you really got to think about strategy different from taxes. So I want to make that distinction. There needs to be a clear distinction between tax prep and strategy. When you're dealing in the tax prep arena, the tax prep arena is pretty much exacto night, pretty much compliance. That's tax prep. When you get over to the strategy arena, as long as you have a reasonable basis for what it is that you're doing, and people always go, wow, Karla, you're far out. You're far out. No, I'm not far out. Here's the thing. When you're dealing with strategy, you got to think about strategy almost like Does that make sense? Could we do that? Is that possible that that can happen? And sometimes you're treading water that has never been treaded before. I like to go back to one of my very first clients I had that tried to write off that yacht. And she had gone to multiple CPAs who said, we can't help you. Like, you wrote off this yacht, is nothing we could do. When she brought that to me, it was a challenge. Like, I had to think it through. But then I started saying, why not? Why not we can't have self-driving cars? Why not we can't have AI? Why not we can't have Google? Who would have ever thought that Karla Dennis would live to see, and I'm gonna date myself here, but it's okay. Who would have ever thought that Karla Dennis would live to see where they no longer threw the yellow pages directory book of all the businesses on your front steps, and we would be on Instagram looking at a business? So always think outside the box, always thinking about a reasonable basis, and always have on your shoulder your level of integrity. My intentions are pure. Does this make sense? And so forth. And if I were sitting before IRS, could I explain this? And as long as there's not a law that says you can't do this with that, typically you could do it.
Absolutely. Hey, I just want to congratulate Rachel for joining, Vanessa. Also jumping into the VIP, we have Mary, Anahi. So that brings us, we have only like 5 spots left for that bonus, Kenny.
Okay,
Wow. Congratulations, you guys, for jumping right in. And I'm just going to tell you, an investment in yourself, and this is really what it is. It's an investment in yourself. You will never regret an investment in yourself. Sometimes we're scared to take that next step. Sometimes we're like, oh my gosh, I can't do it. I can't do it. I remember that when I wanted to open up my first tax office, there was a tax office probably a half a mile from my home. And I know this is probably gonna sound weird. I used to go park in front of that tax office, a little bit down from it, because I didn't want them to think I was a stalker. And I used to just go sit and watch. I'm like, why are people going to their office? Why don't I have my own office? Like, what is the difference between me and these people? The difference was, did Karla Dennis believe in Karla Dennis? That was the difference. So your belief system and what you can accomplish, you got to believe in yourself. And when you're doing that and you have bumper guards, a process, a program, people that are going to help you, that is like bowling, and always making sure your ball goes down the lane and it's always going to knock down some pins, because we're going to be your bumper guards. That is going to be the key. That's what I love about this program. I was always like the challenge. I was always a slow learner. People don't think that, but I was a slow learner. I was that kid they pull out class and get that extra help to. That's okay. I don't care if I'm a slow learner. I'm here now. And that's what I want you guys to believe in.
Karla, we have a few more questions coming in, but before I get to those, I just want to congratulate Rosalia and Rachel for joining, John and Mary for jumping into the VIP. So now we're down to 3 spots left, Kenny, on that.
Okay.
Wow, congratulations for getting the VIP. And when you guys come, be prepared. Be prepared to tell me what you're up to. Be prepared to tell me what you're doing. Be prepared. Get all the value out of it.
Mm-hmm. Hey, Karla, one question that came in is, should we have a management business separate from S Corp, or turn S Corp into a management company?
Should we have a management business separate from an S Corp? It depends. So I like my management company to sit separate from my operating company. And so there's no reason why you can have 1 company or 2 companies or 3 companies or 5 companies. I was listening to the news the other day, and there's a restaurant chain, Olive Garden, that's ran by, I want to say Dearman or Dearden or something. I probably got the name all wrong. But anyway, bottom line is, this restaurant company that runs Olive Garden and all the other restaurants, they are now buying Ruth Chris. They're now buying their next restaurant. There's nothing wrong with us having multiple companies. You can have multiple companies. And what I like to do, I like to isolate my income stream if it makes sense. If it makes sense, because we always want to vet against the price to get the returns done, all of that compliance work. We got to vet it against that. If it makes sense, having multiple companies, is nothing wrong with that. And I'd like to make sure that my operating company, the bread and butter company, is separate from my management company, because my management company is going to oversee all the companies that I have. Kenny, you being a marketing person,
Yep.
I'm sure you studied this, but there's so many companies that we do business with that they own the high level company, they own the mid-tier company, and they own the lower level company, and we just don't even know it.
Right. Yep. They're vertically integrated. You know, Coca-Cola is a business that's, you know, heavily vertically integrated, where they own the manufacturing that's creating the cans all the way up to, you know, the next level retail stores, different things like that. So absolutely.
And you see that a lot in the grocery stores. I know
Yep,
where we're
grocery as well.
located,
Yep.
you have Rouse that owns, I believe, Food for Less. You have
Yep.
Sam's Club that owns Walmart. You have the high-end store, you have the low-end store, and they're taking advantage of both ends of the marketplace. So we could do the same thing. We're gonna be multi-company owners.
Yep, absolutely.
Yeah, I want to congratulate a couple more people for jumping in. Deoxy for jumping into the challenge, and then we have Marlene and Sonia. They grabbed a VIP. That brings us down to two bundles left for that bonus. So we're about to reach our limit. I don't know, Karla, you think we can extend that to a few more people, or?
Yeesh. That's John. I mean, Zachary handles all the technical aspects. If he feels like we have room, I'm here to serve. So he has to decide if we have enough room. Maybe if one or two more people, like I want to help them, right? Maybe if one or two people get in, but I think we're getting ready to hit capacity. I want to really be able to serve my people in the VIP and so forth. So you think we could do two more, Zachary?
Yeah, we can make it work.
Okay, Zachary's our guy. He's our production guy behind the scenes. If he said we can make it work, then we can make it work. Do we have any other questions coming through, John, that I can answer?
Yeah, we had one come in. What are your thoughts about accountants who tell clients that they make too much money? So does Jeff Bezos. He makes too much money and pays no taxes. Please make it make sense.
I can't make that make sense, because if an accountant told me I made too much money, I would leave that accountant. There's never too much money. And I want to see a show of hands of how many people think that there's too much money. Put a 1 in the chat box if you think that there's too much money. I'm so confused. I'm about to fall out my chair. There is never a time when you can make too much money. The key is how you manage the tax implications on that money. I'm going to tell you guys this. When I first started out in this industry years ago, I had this one client that wrote a check every quarter. His estimated tax payments were $225,000 every quarter. That was $1 million a year. When I would tell that to people, they would be like, oh my gosh, that's such a big number. I go, is it? Compared to what? If we are doing planning for a client and we are minimizing their liability and they are writing a check for $225,000, I'm in love with that all day long, because you could best believe their net profit is through the roof. So there is never a time that you make too much money. That really is you make too much money for my level of expertise to help you reduce your tax bill. That was really what the answer to that question was.
Hey, Karla, we had a couple more people join the VIP. Januvi and Alexander, they jumped into the VIP. They grabbed two more spots. So that leaves 2 spots left. Zach, do you have anything to
Excellent.
add?
Congratulations to the two of you for joining the VIP. Also, I'll just share this with you. Many times that when we are talking to clients and we don't know the answers, because I get it, I get this so much. Like clients will come to me and they'll say, well, why my accountant never told me that? Or why this or why that? One thing that I'm gonna tell you is that in this industry, you want to maintain, I'm sure you guys already know this, but I want to speak this. In this industry, you want to maintain professionalism at all times. Never, ever will I ever disparage another account no matter what. I don't care if I get a tax return that I could look at that tax return and say to myself, oh my gosh, this accountant may have been asleep or a little bit intoxicated. I don't know, but I will never speak bad about another accountant. What I will always say is that I'm not privy to the work papers and what that accountant's thought process was, what that accountant's work papers were, but I'm going to tell you what we're going to do right now to either course correct according to what I think should happen, and this is where we're going to go. I'm never going to disparage an accountant for a multitude of reasons. Number one, it's just not professional. And number two, sometimes clients don't always tell us everything. We've had those half-baked stories come to us where clients tell us one thing. Then when we get the paperwork tells us a completely different story. So as you guys are in this industry and as you guys are building your careers and elevating your profile in this industry, just remember, don't disparage other accountants, quite the contrary. I'm always like, I'm sure that person had a reason for what it was that they're doing, but let's come up with a solution right here on what we can do to move you forward. So just always stay in that energy and you will always grow from that perspective. That's just my philosophy as a professional in this industry.
Karla, you've been hitting a lot of great points. And before I go on to the next couple of questions, I just wanted to kick it over to Kenny because we do have that challenge coming up. I know it's going to be you, Kenny, Carlton, and Kenny, can you just kind of let us know what we're going to be discussing on each day, what we're going to get from the challenge?
Yeah, absolutely. So it's going to be a 5-day challenge that starts next week, May 8th. And for VIP, we're going to start at 3:30, which is about 30 or 45 minutes earlier prior, where you're going to get your questions answered with me, myself, Karla, and Carlton. But on the first day, what we're going to be discussing is the mindset of a tax strategist. One thing that we've definitely figured out, it's a different mindset shift to just doing compliance or doing bookkeeping work to really hopping in and doing tax strategy, the communication with the clients. There's a lot of things that need to be done to kind of rewire the way that you think about your business model and get you on the right footsteps. So that's what we're going to be focusing on day 1. On day 2, we're going to be focusing on everything planning and tax strategy. So if you thought today was good, Karla has about 10 to 15 more strategies that she's going to go deep on. Looking through client situation, how do you prepare the plans, templates. We're going to be giving you guys all types of information. So once you leave day 2, you're going to know how to prepare a tax plan. On the third day, what we're going to be going over is, now that we know how to prepare the plan, we have the right mindset. Now, how do we get in front of the right customers who are willing to pay us anywhere between $5,000, $10,000, or $15,000 per engagement agreement? So I'm going to be going over, how do you find these type of clients? What are the marketing strategies? How do you get in front of these clients where you can do it day in and day out and have really a pipeline of hungry clients who are literally standing at your doorstep waiting to work with you when it comes to planning strategies and different things like that. On the fourth day, we're going to be going over everything sales, because Karla's going to teach you how to prepare the plan. I'm going to teach you how to bring them to the doorstep, but I can't, close the deals for you guys, right? So what Carlton's going to be talking about is, once you get an appointment with somebody, how do you take that person from prospect to client, right? And nothing that has to do with being a good salesperson or this or that. We have a very succinct proprietary framework that we're going to walk you guys through, where you don't have to be a good salesperson. Just, if you can, go from A to Z and follow our steps, you're gonna be able to close deals day in and day out. Then following that, we're going to close it out with Karla. She's going to be going over the operations. How do you run a firm at this scale? How do you hire? All of her management principles and everything so you can manage the business by the numbers. So it's going to be a great event. I'm excited. I know you're excited, Karla, and it's going to be pretty cool.
I am excited because aside the fact that I get to work with these wonderful people that are going to be in general admission and our VIP, I actually get to have my sons captured. I mean, when you have grown sons, it's hard to get their attention. So I get to be captured with my grown sons for a while and my other team members on the team. So I'm excited about that.
Absolutely.
We had a couple more people join, so I just want to congratulate Dom for getting into the challenge. We also have Rosalie. Congratulations on joining the challenge. And then we also have Victor who got in. So congratulations, you guys. Looking forward to seeing you next week. We do have a couple more questions. Do you guys want to hear more from Karla though? Before I ask you, Karla, I just want to make sure that they want some more. Can we get a 1 in the chat if you guys are still with us? You want to hear some more answers? Lanice does. Ty does. Zach does. Okay. So can you take a few more questions, Karla?
Yes, I'll take a couple more questions.
Okay. So this is coming up, the inevitable question about kids on payroll.
Yes.
As a business owner, if they're minors, say 10 years old, are you still and you have them as a dependent claim on a tax return, can you still put them on your payroll?
Yes, you can. Kids, especially kids nowadays, these kids are like little whippersnappers. They could do a lot. There's no age limit on how much when you can put kids on payroll. So if you think about kids are doing diaper commercials, Huggies commercials, somebody's holding babies and it's different things, those kids are on payroll and they're being paid. When you're putting a kid on payroll, you just have to make sure that the job that you're asking the kid to do, they can do. Whether it's emptying the trash, answering the phone, filling up your copier, handing you your files, grabbing your water, whatever it is, these kids are smart. They know how to work the internet. They know how to work computers. I mean, they can do stuff that I can't do. So absolutely, you can put a 10-year-old on payroll, give them a job description, and you can pay them. And then they can take that money and go pay for their own sports, football fees, basketball fees, whatever it is that they're doing.
Okay. Before we go on the next one, I just want to congratulate Tamara. Tamara, congratulations on getting into the challenge, and Centria, congratulations. Looking forward to seeing you next week. We had a question around private foundation strategies for tax benefits. Is there anything you recommend? Yeah,
you definitely can do a PFF, private family foundation. You could do CLATS, charitable lead annuity trust, CRATs. It's endless. So there's a lot of strategies you can use around that. The key is making sure that anytime you're going to set up any type of private family foundation, that you know that you're going to be running that foundation according to the rules. So there's no self-dealing with that private family foundation. When you hear in the news that, oh, so-and-so donated X amount of millions to blah, 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 they are doing that typically for tax purposes. Not that they're not philanthropic or charitable or whatever the case may be. But I just know in the back of my mind, there's a play on it, right? There's a tax play, and then there's the PR play that goes with it. So you can have a private family foundation. The key word, private family, meaning that you're not asking for donations. It's private. Your family is donating money to a foundation for your own legacy. And at some point, you're going to be working in that foundation and doing those things in which you choose to do, whether it's scholarship funds or mentoring or whatever it is. It's just something that your family is actually doing. So there's lots of strategies around nonprofits, trusts, things of that nature.
Awesome. Yeah, no, that's great. Real quick, I just want to congratulate Mark. Vanessa for getting into the program, and Mia, congratulations for getting into the program. Karla, do you have any words? I think we're going to wrap this up. Do you have anything you want to say before? I don't think people are going to have the opportunity to hear from you for a while. So.
They won't have the opportunity to hear from me for a while. I will definitely be on the challenge. I'm looking forward to challenging those that are on the challenge and teaching them and really pulling out the greatness that is already within you. That's what I'm looking forward to. Everybody has greatness within themselves, and I'm looking forward to pulling out the greatness that is within you. I believe that the teacher will show up when the student is ready to learn. And so I'm looking forward to seeing you guys on the challenge on Monday and really leaning in to help you and give you all the tools that you need to move forward, and really just having some vulnerable moments to share and just help everybody, right? I always feel like the knowledge is in the room, but a lot of us sometimes don't want to speak up. So we're going to speak up. We're going to share. I'm looking forward to that. And I just thank everybody for allowing me to serve today and to impart some knowledge upon you guys. And I look forward to learning from you as well.
Hey, thank you, Karla. Thank you so much for your time. We do appreciate it. I know everyone in the Zoom call appreciates. Well, let's see a 1 if you appreciate Karla for coming on today. And everyone that did get into the challenge, we're looking forward to next week. We've got a lot of stuff planned, so it's going to be a good time. Thank you again, Karla, for everything you provided us today.
You're welcome. Thank you, guys.
Bye, guys. Take care.
Have a good weekend.
Bye.